Welcome to Financial Fitness JA. I'm Julio Dawkins.
And I'm Jade Harrison.
And today we're going to revisit a topic that we had discussed earlier on, Jade.
We're going to give more details.
Yes. How to manage a credit card. Jade, you had spoken about the credit card and how to kind of use it. How do we manage the use of it?
In terms of managing a credit card, it's very straightforward. You're going to try and, like with everything else that we have taught in terms of creating a budget,
right?
You can create an actual budget for your credit card, where you budget based on your income, what is it that you'll be able to pay at the end of the month and still survive going to the next payment period. So you can look at creating a budget before you even try getting into a credit card. And when you get into the credit card, you incorporate it into your budget in terms of how you're going to pay it back every month. And you're going to be wanting to pay it back early. With regards to finding the best card for you, it's important that you don't just take any credit card that the first person comes and introduces to you. So you're going to look for the credit card that gives you the rewards that you want. First of all, you're going to look for the credit card that gives you the best rate.
I was just about to say that.
Yes, so you're going to look for the lowest rate you can get in the market with your credit. What Americans call a credit score. So with your credit, you know your credit profile. The banks locally, they actually have a system that they pull down your credit profile from based on your credit history.
And your loans. So that includes your loans, your cards, everything. Yeah.
So based on what you know of yourself, go and seek out the best rate you can get by simply making a few calls or checking on some online platforms with each institution and seeing what is available, or just speaking to customer service. Because these guys, as I said, are always willing to talk to you.
Yeah.
So find the best credit card offer in terms of the rate, and then find the best credit card offer in terms of the reward that you receive. Most of the cards nowadays don't just give you the credit; they give you some kind of reward for spending the money. So you might have a card that provided with travel points for you to purchase airline tickets. You might have a card that gives you rewards to purchase at an affiliated institution or a store. So you might be able to take your points and buy a toaster oven, take your points and buy a washing machine or a fridge, depending on the structure, the reward system. And you have even cards that give you cash back. So you can actually take the cash that you spend and the rewards that you get from that and add it back to paying off your card, which is effectively lowering the interest cost anyway, or put that cash to something else. Just put it back on the card and use it again if you don't want to just leave it as a payment. Try not to use a cash advance on a credit card. So if you have the credit card, you're using it to do stuff online. A cash advance, when I say a credit card should be for emergencies, a cash advance is even more so. You don't want to be using cash advance on credit cards. I don't remember the exact fees, but it is extremely exorbitant in terms of the charges that you receive when you do a cash advance from an ATM. You know, you can go in and use your card from an ATM and pull out actual cash.
You can actually use your credit card to do that.
So you don't want to be doing that at all, possibly not at all, because it's not really beneficial for you in any form. So it should be a big no. Pay off before the month ends. Definitely. That's an obvious one.
Definitely.
Sorry, I wasn't going on over it like that, but pay off before the month ends. So manage the payment cycle.
Right. So
another key point to decide on before you get a credit card. Some people get credit cards when what they need is a loan. And sometimes an actual personal loan gives a lower rate than a credit card. I
would think all the time, based on what is going on in the market.
You're right. Yeah. All the time. I think so.
But to our viewers, give them an example of like a personal loan versus an interest rate of a credit card.
Well, a credit card is credit you always have on hand, but it's just rates. That But in terms of the actual rates, they vary. But some people have from 35% all the way up to 48%.
Right. And then for a loan, it can be anywhere from 8% to about 20%.
Yeah, so depending on what you're doing, you need to decide if you're going to purchase, whatever you're doing, make a purchase or do your transaction with a credit card or with a personal loan if it's more something for a longer term kind of period. So that's very important.
And the aim, and just to add to what you're saying, that's a very good example. Because some people take the credit card and use $10,000 and they think that they can pay $5,000 this month and $5,000 next month, and based upon the minimum payments. But sometimes people, all they need is a loan, and then if they have a loan, you have a longer time to pay it off, lower interest rates.
Yes, the same thing.
So it's better. It's better. Use a personal loan if you can.
If it's something structured like that, that's a good thing you want to do over time.
Right. Use a personal loan.
Yeah, use a personal.
Especially for a long term situation.
Look at paying. You're speaking about minimum payments.
Right.
If you're in managing a credit card, look at paying more than the minimum payment.
Definitely.
So you might be able to, your minimum payment may come on the card, it might be like, say, pay $5,000 or $10,000. That's what they require for you to pay. Pay more than that. Look at always reducing your debt to pull down your interest costs. It's very important, and it works out really good for you in the long run if you're consistently doing this, because eventually you will bring your credit limit on
credit score,
and your score is that essentially, because I don't want to speak in American terms, but it is like,
but it is a
credit score.
It is.
So there are also things like with credit cards, like say for instance you have a credit card in a bad situation and it's gone over, you're not managing well, and you don't know what to do. Seek out some kind of debt consolidation where you can convert your credit card loan into a personal loan.
Correct.
That's another way to manage your debt. So that's people sometimes panic when the credit card can't handle it.
So guys, they call it a credit liquidation loan, where they liquidate your credit card. Literally tear up your credit card and then turn it into a loan. And all these good terms will be gotten by you, and therefore you can move on, structuring yourself and taking your time reducing your debt. So Jay, yes, you are correct. Yeah, so
these are just a number of things that you can do, but that's how you go about managing a credit card, guys. There isn't much to it, so just get to it and just get it done and be prudent about it. Yeah, so that's how you manage a credit card, guys. Any more questions, you can leave them below in our comments. I will get back to them again. Have anything to add, yeah?
I mean, just to, guys, as the major thing I wanted to reference back to what we had said earlier, there's a difference between a credit card need and a loan need. For example, businesses use a credit card to pay vendors and then pay with their receivers. Some businesses use it and get cash back. And when you have a certain limit, for example, $1 million, you get a cash back of $30,000. Some owners even use that to help offset simple office expenditure and office costs. So there are pluses to using a credit card. But in terms of the time period, if it's only for a short time, but if it's something and you know that in long term and you're not going to be able to pay for now, don't use that credit card. Trust me, guys, don't use that credit card. That's pretty much it, my friend.
Yeah.
And as usual, please like, share, subscribe, and ring the bell. All right, later, guys.
Yeah.